AJ, for those who haven't come across you online, introduce yourself and tell the listeners what we're talking about today.
Sure. I'm AJ Loiacono. I am the CEO of Capital RX. We are a pharmacy benefit manager, but also a software company, since technology is at the core of us being able to deliver lower cost as well as better patient outcomes and higher satisfaction for those members.
I'm going to give you permission here to talk about some competitors, and we're not going to name them, but here's the question I have. Maybe these PBMs didn't grow technology-wise because they kind of thought it was maybe a pain in the ass and too much investment and all that kind of stuff. What things in particular do they not want to go the direction of better technology because it's less profitable to do some of the things that you're doing?
Well, I think the use of technology that certain competitors would not want to explore right away would be things that change the financial model that they benefit from so much. There are some publicly traded healthcare companies that rely 50, 60% of their earnings on pharmacy. You just have to Google a large healthcare entity and it'll say things like beat earnings due to pharmacy benefits, lifted by pharmacy benefits. It's almost as if you're an underwriter on the medical side. You'd be like, I'm on a break-even game plan here. You on the pharmacy side, you're the little engine that could keep, pushing our earnings, even though you're disproportionately smaller than medical spend. And so, why do they not invest in these things?
We know they're smart. We know they're,
yes.
As Scott Knorr said from APHA, he said they're geniuses. Now they're evil geniuses, but they're geniuses.
And to be fair, I don't use the phrase evil genius. Genius is genius in the sense that, to be fair to a publicly traded company, your primary fiduciary responsibility is to the shareholder.
It's subjective, the evil part.
And I just want to make this clear. If you're an executive, this is, the hand you have to play. I don't get up in the morning and twirl a mustache and be like, hey, how are we going to do this? It's just going to be like, hey, this is how we make money. I need to maximize this for the next earnings. So what makes it very difficult is anything that disrupts control. So the supply chain, once upon a time in the late 90s, early 2000s, the supply chain was controlled by pharma. That they were so outsized in their influence. You need our medication, we sell through the supply chain, and, you need us.
Yeah.
And then the PBMs started getting bigger and they started to consolidate, and you started to see some entities that had real purchasing power, 10% of the market, 15% of the market, 20% of the market. For me, when I personally look historically and say, at what point did pharma abdicate their rule over the supply chain? It was 2003, 2004. We began to see the birth of pay-to-play economics, the first formulary, if you will. Like, hey, I have 5 drugs in this therapeutic category. Maybe we have 3 that are our primary choice, and you 2, unfortunately, are going to get kicked to the bad tier, which is going to be a higher copay, and you're going to lose market share, and people will pay up for that and be like, oh, okay. And then it really started to take off because the PBMs, let's be frank, they're smart. They said, this is a good thing. It's not just about access. What if I start excluding drugs? Like, we're just not even going to allow you to have access to these therapies. What would you pay for that?
Not a tier.
An exclusion. You're out.
You're out. You're done.
You're out. Go pay cash for that, or I don't know, go deal with that on your own. Then suddenly, pharma is terrified. And if we went back to 2004, 2005, every time pharma raised the price of a drug by $1, maybe a quarter or 30 cents rolled down the supply chain into the hands of a PBM. Then that went to like 50 cents on the dollar and 75 cents and $1. And then you see the curve invert in 2014, which is fascinating if you're a pharmacy geek like me, which is suddenly the economics completely shifted. And this was, it was the beginning of the end in 2004, but this was the death knell of pharma at this point, where they couldn't raise their drug prices direct correlation to the ask from PBMs. So let's just say your drug price is X at pharma, and your friends on the other side of the phone at the PBM say, hey, you'd like market access, we're going through these things, we'd like some rebates, we'd like some, discount on acquisition costs and a bunch of other things we're going to layer into this contract, but, it's about 15% ask. Now, in the old days, what would you do? You'd be like, well, that's easy, we're going to raise our price 15%. Let's go have a pizza, problem solved.
15% ask. Slow that down just a second for me. I always blame it on the listeners, but it's really for me. The 15% ask, give that scenario again. What are you talking about there?
So let's just say on drug X, let's just say even numbers, I was getting $100 from you. Going into next year, I want $115.
The PBM wants that rebate.
Or other incentives.
Or discounts or something.
Whatever it may be. We don't have to go into the details, but let's just talk gross to net.
However they want it.
There's a bill.
There's a bill.
Here's a bill at the end of the day. And so last year it was 100. Now we want 115. Now in the old days, they would be like, oh, I have a solution for this, pharma. We're just going to raise our drug prices. Problem solved.
In each transaction, if pharma could raise the price another $15, the insurance itself is paying for the drug, but somehow the PBM has to take off 100. Now they want 115 out of that deal.
Exactly right. And this is what's fascinating is it's like, it makes sense to be like gross to net. Like my list price will go up, my net will stay about the same in this scenario, but you start to see this drag where the ask starts to become a little bit higher. And what happened was pharma lost the ability to have endless price increases. This is where you saw CEOs of global pharmaceutical manufacturing companies, say things in 2015 and 16, like, we won't increase the price of our drug more than 10% each year. So they're creating this cap, if you will, like, hey, do not exceed, or you end up on the cover of the Wall Street Journal, like, whoa, what happened? That wasn't me. Like, who would ever, do a 20% increase in drug prices?
The PBM wasn't telling the manufacturer not to raise the money.
It was outrage. It was public outrage.
Public outrage. That prevented them from going up easily from adding another 15% to it.
I think people started to say, what's the consumer price index? 1-2%, and branded drugs are 14.5. Like, whoa, like that doesn't sound right.
In the meantime, the PBM still wanted their $15 additional, but now pharma, because of press or whatever.
Well, there was legislative oversight. There was the media suddenly kind of sticking their nose into things. People for the first time were downloading price lists and looking at them.
The PBM wouldn't be against the manufacturer raising the prices. It's all the other stuff that prevented it from going up that 15%.
They just want their money. The PBMs at the end of the day are like, my appetite isn't going to go down just because you're having a tough time, pharma. So this is when you see gross to net, global statistics. You'll see in 2014 this number go from like 55 to 53 to 50 to 48 to 46. So it's this slide of gross to net.
Define that, gross to net, in our conversation.
Gross to net is, let's just say, whatever list price you want to use. We can have an entire discussion on what list price is, but you have a price that you're broadcasting to the world, in the U.S. market, here's our price. And net is less all other things coming off, and these could be everything from rebates to discounts to chargebacks to acquisition cost rights to, take your pick, coupons to, sometimes people even look at manufacturer assistance programs in these, and so, but this is what's taking that price that's being broadcast to what's the reality, less all these other items. So at one point, they were treading water, which was pretty good, but what you've seen over the last, call it 7 years is we call the sliding effect, where suddenly they can't raise the price dollar for dollar with the ask. Now, someone would be saying, I'm oversimplifying things in the supply chain. I'd like to have that debate because I think we would agree what the largest takeaway on gross to net is at this point.
So the PBM wants 115.
Mm-hmm.
The manufacturer in the past could always get it up to 115. Now they can't for all these reasons.
People are looking.
People are
asking
looking.
questions,
And then what in 2014?
Well, in 2014, you started to see the inverse. So they couldn't raise the price. So they could be like, the best I can do is I can raise it 10, but I'm giving away 15.
Mm-hmm.
And then it was like, all right, they want maybe 17. And I'm like, I can only raise it like 9. Like, this is becoming punishing. You know what I mean? And it becomes a runaway freight train. Now, every brand is different. I always point this out, where you are in your patent life cycle, how many drugs are in your category, what are the price points, what are the treatments. There's so many things that go into this. So I don't want to make this,
Sure.
this is for every single brand. But what happens is, it's fascinating to me when you speak to pharmaceutical brand managers, like half of them think they're winning at any one time. They're like, I love this system. Like, I'm today's winner. I'm on formulary. I have access. This makes sense. Then there are a bunch of people be like, I hate this system. I'm the loser. And this is what it creates. They have just enough winners offset by just enough losers.
Half of pharma thinks they're winning, half of pharma thinks they're losing.
Just enough for, they're like, I'm still all in on this. And to be fair, where are you going to go? And this is a very important part of innovation, which is, how do you open up this avenue? So I think pharma up to this point has really just been stuck in, I have to go to a set number of channels and a set number of people and do business a set number of ways. Like, this is the status quo.
Yeah.
Why would I change it? And to be fair, no one wants to be potentially punished. Like, you don't want to be the person that's causing a ruckus, because the main buyers are very powerful. And so, you have to kind of be like, okay, business as usual, let's see. But I will say, you're starting to see pharma understand this is a situation that can't stay this way forever. And so I think you're starting to see innovation, suddenly come through. And I think you're starting to see conversations around this, programs around this. And I think needs to be reinforced down to the plan level, where I think the actual employer groups need to start thinking about, what is this pharmacy benefit? And more importantly, who's consulting me on this? Are they part of the status quo that wants to keep churning out, kind of a rebate chase and age-old, unchallenged economics? Or are they willing to look at us and be like, what are we solving for? What are we trying to do with our benefit program? And how do we manage it? Is this the only option? And so, I think you have to be in healthcare today, for any innovative company, a lot of things to a lot of people. And so for every super innovative client I have that literally crumples up the old rate card pricing of PBMs and rebates and discounts and says, let's focus on single ledger reconciliation, where you and I are the same thing, the PBM and the employer, we see price. Now let's go about, what am I trying to solve for? Better outcomes, better satisfaction, lower price, are these mutually exclusive? And so suddenly you can have a thoughtful engagement and help them create the program that's best for them. And then you have people that are just, I don't really have the time for this, I'm not interested. My consultant tells me this is the best thing. We got to chase the rate cards and the price, and that's fine. We can do that. But here's where technology plays a role. So many times people will say to me after we win an account, how the heck do you purchase drugs cheaper than blank big carrier? And I'll be like, I don't. I just operate on a fractional margin of revenue. I don't need the number for Wall Street. You got to remember is the big entities have zero growth story left. This is lost on people, but it's important to remember. There are two types of stocks trading, oversimplification, but there are two types of stocks out there any day you can invest in. There's the high-flying growth companies. There's the usual Apple, Google, Netflix, Tesla, and they're going to continue to grow year over year, and people are excited about that growth. And then there are companies that are just meet or exceed earnings. I'm a utility stock. I'm a banking stock. And so what people don't understand is in the healthcare industry, due to hyper consolidation, there are no more worlds left to conquer. I often say there's 20% of the market that isn't owned by mega entities. And this 20% of the market you can't buy. They would be FTC violations. They would be other blues plans or nonprofits or other carriers that aren't quite their size. And this is important to remember. So if you have no more growth left, if you read their 10Ks, there's clearly no growth in lives. But it's growth in earnings. So they extract more and more out of the payer back to your fiduciary obligation to your shareholders, which is, hey, look, I have to do this. If I show up next quarter with no growth and the same earnings, not a great story. So I've got to show up with the same growth, flat, and I got to show up with more earnings. And every time you hear a healthcare company talk about more earnings, the employer and patient should be the ones who are upset because this is who's paying for it.
We talked about pharma. Yeah, half still like the system, half don't. Are there any employers that are doing okay in this PBM system? Are there any of them that are taking rebate kickbacks and all this crap, or are they all suffering?
Well, I always say it's relative to what you know. So, if for the last 20 years, I don't care, HR head passing it to the next HR person and passing it to the next chief operating officer and CFO on the budgeting side, healthcare looks pretty similar, and let's just take things that are below 20,000 lives, that still, have some needs around stop loss and other things, which is the insurance to contain risk globally on pharmacy and medical. And attachment points are 110, 115%. So by its very nature, the expectation is things could be bad.
What is that attachment point? What do you mean by that?
Attachment point is each state basically creates a set point in which the costs need to be contained in a policy, if you will. So if you say your attachment point is 110%, if I have $1 million a year medical pharmacy, the attachment point for my coverage, where my stop loss will come in, some reinsurer and carrier, will indemnify me as a self-insured entity, that will be at $1.1 million, 110. In some states are 112.5, some are 115, whatever it may be. And you can buy different lines in between. But the whole point is, the reason why I bring this up is your expectation is north of that is a bad thing. And then you'll hear what we talk about global trend. You'll hear companies will show up with things like, our average trend this year across our book of business was 3%. People will be like, oh, 3%. Like, that's great. That's awesome. Like, this is my expectation. But if gross to net is negative, shouldn't it be negative? And people are like, no. This is what we're selling. And let me tell you, all too often, there are some consultants that jump in that wagon very quickly because I can't tell the difference between them and the PBM because, let's be frank, they've made some good money together. But what's interesting here is when you talk about this, I have clients that have 3 years of negative trend. Our entire book of business at the start of this year was negative 27%. That is unheard of. And people will be like, oh my God, how do you have such good pricing? I go, we have okay pricing. I'm just giving you everything. I'm giving you visibility to it. And we have fair clinical oversight, which is, we're not just approving every drug. We're not just pushing people into every therapy. We're asking questions. And, I often say you can do this and still have extraordinarily high customer and client satisfaction, which we do. And so why do people think this is okay is because they've been trained by an entire industry that bad begins at 110, 112, 115, and good is +4.
So it should be somewhere way below 100. And now it's not only 100, it's above 100, but everybody's sort of okay with that.
The entire industry, employers and heads of HR have been trained, which is a bad day is 110, 112, 115 above my attachment point on liability. That is where you don't want to be. Like 110, 112, 115, that's where bad things happen. We're like, whoa.
What bad things are happening up there?
Your expense is much higher than probably what you told your CFO. You probably told your CFO at the start of the year, let's trend 107% to be safe. But if things go sideways, our stop loss kicks in at 112.5.
So on average, it might be 100. Some years we hope to be 90. We're willing to go up to 110. And all of a sudden, everybody's happy at 105.
Well, that's what they've been trained for decades, which is your healthcare trend is positive only. It's a target of 3 to 4% according to national averages
Going
that they
up.
love to broadcast. Yep, so 103, 104%. And that a bad thing is 110, 112, 115, your stop loss kicked in and you got to deal with something. But the point of it is that's your perception. Your reality is look at us. We're plus 4%. It's a great day. But should it be negative 12? According to my book of business, the answer is yes.
We have our insurance guys every year, and they're like, all right, sign this. It only went up 12%. Sign it. And you're like, there's no chance in hell it going down, and they don't even blink, right? I mean, they're just like, there it is.
No, they're trained. If your understanding of what is a decent outcome is positive 4 to positive 5, okay, good enough, And this is what the expectation is. So when people go out and they look at pharmacy benefits and they engage with consultants, you suddenly get into these really difficult, the analysis around here are my discounts and rebates and schedules. But if you notice, we're not talking about absolute cost. We're just talking about a model of simulation of things that show savings. And no one's, think about who's risk. Is the consultant? No. Is the PBM? No. The payer is at risk. And so the payer is stuck with that bill, be it, 104, 110, 112, whatever it may be. And so what we're trying to point out to people is at the macroeconomic level, drug pricing has gone down multiple years, and that there is a story here, especially if you have, what we would say sensible oversight on clinical, your new starts on high cost claimants, if you're taking a rational look at that. And to be fair, a lot of PBMs and carriers don't want to slow down expensive drugs. To be fair, how do you make improved earnings? I mean, generics play a smaller and smaller role each year. Simple molecule really isn't pushing the ship at this point. What is? Biologics, expensive, high-ticket items.
You're saying that drug prices or pricing has gone down? Is that because of the good work you're doing? Or are you saying in general?
In general, gross to net.
The big PBMs, at least, are paying less, and so it is going down.
It's going down, but the American public may not see that.
Gotcha.
Because of a system is what I call winners and losers at the register. Here's an important point is, why is it a roulette wheel when I show up at the counter? Why does the price change for a drug every hour of every day in every pharmacy? It's insanity. And people will be like, well, drugs are just bouncing around in price like the stock exchange every day. And I'm like, no, they're not. I'm like, drug pricing is incredibly stable and everyone has a price in the supply chain. And my point is everyone should receive the same price. And people are like, oh, no, that can't happen. And I'm like, why? And so this is what's overlooked is that the behavior on so many levels is in conflict with what benefits the plan and the patient. And that's what needs to change. And to do that, bringing it all back to technology, you need the platform that can deliver on these promises.
Is it fair to say, not giving the PBMs any benefit of the doubt, that one answer to the question of why they haven't used technology to make things more transparent is because smoke and mirrors can raise profits?
Well, sure. I mean, think about it. If everyone has a different price, even people in the same plan, it is very difficult to understand what a real price is or what a fair price is. And this is the argument that a lot of people in healthcare use is like the little patient can't handle all these prices. And I'm just like, just pause for a second and let's just be real, which is the average plan might, and I say this all the time, might have anywhere from 10 to 20,000 unique NDC-11s drugs. You know what I mean? You go into the average supermarket, your stock keeping units are 50 or 60,000. I'm not overwhelmed when little old me walks into a supermarket to pick up my Cheerios or a steak. And then if you look at a big box store, they have hundreds of thousands of items for sale. And again, am I intimidated when I'm buying a pair of flip-flops and popsicles? No, I think these are fair prices. Why do I know they're fair prices? One, we all have the same price when we're walking in the store. Two, buyers and sellers are freely communicating on price. It is just that store and me communicating on price. There isn't somewhere, think about it. If the PBM industry existed in our lives the way they are today, let's just follow me into a supermarket. And I'd be like, oh, I'm about to reach for a box of Cheerios. There's no prices. Well, wait, where are the prices? And suddenly someone comes in and be like, hi, AJ, I'm your shopping assistant, and I can't show you the real price, but understand this is a super low discount. Discount off of what? And you look at the aisle, nothing has prices. It just says the average list price minus 18.5%. And in aisle 2, it's, the average list price minus, 85%. And then there's one for, Misfit Island of single source, multi-source DAW handling. And you just sit there and you're like, wait a second, I can't see price. How am I ever supposed to know what a fair price is for Cheerios or gasoline or take your pick on anything? We don't exist this way in the United States in any other marketplace. And this will and shall come to an end.
That leads me right into this question. Is there any other industry, or was there any other industry that was even close to this? I was talking to one of the guests, and they were saying that the closest they remember this was back in Wall Street when the publishers of certain editorial pieces were actually owned by these companies, and they were trying to manipulate the general public and so on. Is there any industry that comes to mind that's like this or was even close to this?
Well, I think one you could look at from the 80s, which was broken up, which was the telephone industry. Where you had a virtual monopoly and no one knew what a fair price was. And the moment they broke it up, what happened? Like the price of a landline went to zero. If you looked at in the financial industry, once upon a time, if you traded stock with someone, they could keep 10% of the value of the trade. So you trade $10,000, they could keep $1,000 on a trade. I mean, okay. But then companies like E-Trade and Ameritrade showed up and said, I'll do this for $59.95 and $19.95. And then companies like Robinhood show up doing it for zero. And even, large institutions like JP Morgan Chase will trade now for $0. And why? Because that's the fair price for a trade. So when buyers and sellers communicate, things become accessible and simplified through technology. You create market efficiency.
The phone bills, I can see, yes, it was a monopoly, but even there, you could pull your statement out that came in the mail and go to your neighbor across the fence, and maybe you all paid the same monthly phone bill, but you knew what it was. And then now with cable or your cell bill, it might get lost in the shuffle and all the taxes and all that BS. But still, if you want to spend a few minutes and talk to your neighbor over the fence, you can still say, oh, you're paying $45, I'm paying $95. But at least you can tell. But the drug ones, you couldn't even tell what you were paying.
I think that's the interesting thing is, what you're talking about is the list price for your phone bill, at least didn't change too much. But list is kind of an exercise in perception.
But you knew you were paying your phone bill from your checkbook. Ultimately, you knew.
Yes. And I think this is part of a system that is broken. I say drug pricing is broken all the time.
So drug pricing is the worst. There's nothing you can compare that to that's been so terrible.
I find it very difficult, and and I think at this point in my life, when I think about how I want to spend my time, is what gets me out of bed early and has me work late every day is I am disgusted by the behavior that goes on in this industry. I don't want to characterize everyone as, being part of the problem instead of the solution. There are other people out there that view it from our lens and want to be helpful and get it. But back to my world of 50-50, it's a coin toss for every person that you find that wants to challenge the status quo and do what's right and rethink the model and, be a force of good. There are people that are like, I like the old world. I make money on it. My channels and resellers make money on it, and we're going to keep making money on it. Have a nice day.
With the 50-50, I can see the opaque PBMs maybe being 100-0. I can see maybe insurance sales guy being 80-0. When you talk 50-50, that's the manufacturers you're talking about, because anybody underneath that, the employers and the pharmacies, they're like 0-100. Who's 50-50? Just the manufacturers?
I think the entire supply chain.
The supply chain, wholesalers and everybody.
Wholesalers to hospitals to pharmacies, because even though you may get one pharmacy that sees it the way you do, you got another pharmacy that's like, not so much.
Yep, they've got certain drugs that they're pricing off AWP, paying a percentage of that or something like that.
It's okay, is my point, which is, I think what we're just trying to understand, though, is what drives that behavior. And it's self-interest. I mean, it's a very clear answer is how much am I making in this transaction? And so I think that's part of the challenge. And so as you create real financial transparency, single ledger reconciliation, prohibiting people from marking up prescriptions, I think this is where we suddenly get to that efficiency moment. And you can have honest conversations. I mean, think about it. The entire PBM industry today operates its revenue model because people are confused or can't see things, not because of the value you bring to the table. If that was the case, everyone would have the same price and you would have a flat administrative fee. And I often use this as an example. I go, imagine you go to an attorney and you'd like to hire the attorney and be like, oh, I hear wonderful things about you. And I think I use an attorney because obviously they're higher their rate, the more experience they have, so for the attorney that's charging, $2,000 an hour must be the heck of an attorney, which is someone who's charging $200 an hour might be a junior associate who's got a couple years of experience under their belt. But imagine if someone goes to you and says, I'm your attorney, and it's free. You go, oh, okay, that's pretty cool. But I keep stuff in between when I touch certain transactions on your behalf. And I'm like, wait a second. But that's the PBM industry. And you never know how much they're making unless you go through their 10K and look at their quarterly earnings. And you're like, wait a second. You had 9% increase in script volume, but you made 18% more in earnings? Like, how does that work? That math's pretty cool.
So it sounds to me, AG, like you're saying, hey, I'm not here trying to say, look at what I'm doing because the other people are so terrible, because 50% think they're terrible and 50% think they're not. What you're saying is, I'm going to clear it up. I'm going to make it transparent. You come and take a look. See what you like.
I think that's exactly right. You want to focus on what you're doing better, the tangible results that you have, how you differentiate in the market. And you want to tell that story. I don't want to get into a mudslinging festival of this person versus that person. Who cares? I'm focused on, let's elevate the conversation. Let's focus on what we're supposed to be looking at, which is reduction of cost year over year. Actual cost, not I have smoking hot rates and, oh, if you actually were to see the rates, they would blind you. I can't tell you how many times I used to get a chuckle out of that. Be like, nobody can see the rates except for me and the burning bush. And I am like, what?
It's ridiculous.
And I'll be like, and the best part is they sell this nationally, this garbage. And I'm just like, nobody wants to question this in the least bit. So just so I understand your value proposition is, there's really no risk on your behalf to sell this product. There's really no risk on behalf of the PBM. And the rates are so good, nobody can see them except the very person who sold me and validates the rates. I mean, it sounds like, almost like a joke, but This is the vast majority of transactions in the United States in healthcare. And it's not just discrete to pharmacy benefits. I'm sure you could get a panel of guests and we could all say the same thing. But I think the point of it is the world is changing in the sense that technology has caught up. People that are willing to leverage technology, people that are willing to approach the market differently and, not be paid because of confusion or conflict, but be paid because you deliver real value and a higher level of service.
So AJ, let's say your video guy is walking around and I say, AJ, let's take a video of somebody and their response to this cool technology you have of seeing the transparency of things. And you say, Mike, have your video guy come along to this meeting I'm having with this person because they're going to look at this online computer screen and they're going to see this. Who is that person going to be? Who's that person that I should follow with the video camera? Is it a CEO of some company? Is it a consumer? Is it a pharmacist? Who's going to be the most coolest revelation of this software that you have?
I think it's multiple people because Judy is the name of our platform. So Judy is short for adjudication, which is a fancy word, as you know, for claim processing. But Judy touches so many different aspects of what we call a benefit claim life. And so it's not just one person. So, the things that I point to is a quarterly meeting, with a benefit HR manager, someone in charge of benefits. And, it's not just the reporting suite and all the metrics that go into that, but it's also how the system makes recommendations based upon the data that we're seeing. And that's, people are like, wait a second, you're making recommendations to me? Like, I've been using X carrier PBM for 7 years and no one came to me with a fresh idea other than exclusive mail. It's specialty, which is, self-serving again. Yeah. And they're like, this is amazing. And is every idea perfect or do they accept it? No, but we're working for a living. So I think that's a great, people, if you could follow that engagement at a client meeting, I think you would see so many really cool technology reports, et cetera. I think the other area is in our call center. We strive for same-day resolution on everything, including prior authorization. And this is a breath of fresh air. We take a very proactive approach of surrounding the problem. And I think we can do this from a technology standpoint because everybody operates on the same system. From our call center, client management, underwriting, pharmacy network management, our chatter across the company, we're all bound by Judy. And so this creates lightning fast responses. So someone will have an issue and they'll just be like, oh my gosh, I don't know what to do. How can you help me? And it's our job to not just aid that customer, educate them, help them, and follow up. Not just, you're on your own, should be all set. Let's follow up with them as well. So if you look at the technology there in that engagement, if we obviously blinded the member and their information in that engagement, but you would hear how fast we're resolving issues.
It's not just the technology that's making it fast because you're on the same system. It's because people are all familiar with the Judy nomenclature.
Yes, it's written in a natural language framework, and we wanted to make it approachable. So even if a junior call center person who's very green, it makes sense. It's not what we call a code-based system, or you need to be a subject matter expert to operate the platform. And this is where we've even seen, not just our entire organization using it, but people from employer groups going on to Judy and being able to do things they never envisioned they could do self-service on. Like, whoa, I could make this change? Be like, yes, if you'd like to, or we can do it for you. And a lot of people want to do it, because it's immediate satisfaction and resolution for what they may be seeing or hearing as well. So, and I think the third instance is even at the pharmacy. One of my favorite stories is I was at a benefits fair, and for one of our clients.
What is that, a benefits fair?
A benefits fair is, someone wants to have all of their healthcare vendors in a room, from dental to medical to pharmacy benefits, and to have them engage with the vendor and learn more. And I like to go to these things because, it's the only way you get to know your customers better and the questions, the members are asking, as well as the administrators. And so I was at one of these, and the head administrator goes, "Hey, AJ, I would like to introduce you to one of our members. He wants to speak to you personally." I said, "Oh, sure." And he comes over and he goes, "I just want to thank you and your team so much. We had a really tough year. My wife passed away from cancer." And I'm like, "Oh my God, I'm so sorry." And he's just like, "I know, it was a horrible time, but you were a bright spot in a very dark period." And I said, "Oh, like, how did we help?" And he goes, "I was at this medical center on a Saturday afternoon, and it was a prescription. And there were quantity limits in place, but sometimes quantity limits go out the window with oncology, and it needed authorization. And so he flipped over the card while he's online at the pharmacy. And the pharmacist is like, "I've been doing this for a while. Like, you're going to come back in a few days if you're lucky, maybe a week." And so this person, flipped over their card, called us. We called the pharmacy, same time, our call center's 24/7, and called, resolved the issue, got back in line in 7 minutes. And the pharmacist is like, "I've been doing this 27 years. I've never seen anything like that before." And so this is where, when you have one platform that's communicating, you have no conflicts of interest within our organization or against our employer or member, and all we want to do is provide the best service and support. This is one of hundreds of experiences that are happening every day, and I point this out. It's so important to remember, which is this unique? No, this is what every customer receives when they work with us. And I think it's putting together a lot of pieces, but from multiple lenses in this claim life cycle. Everyone is benefiting from Judy and our philosophy.
AJ, I know that you don't like to pick on your competitors too much, but I do. I love nailing these SOB. Let me ask you this. These PBMs, or these insurance companies, on purpose, they make prior authorizations difficult because they're hoping that a percentage of these people go away or die or somehow not get that product because it's going to save the insurance or the PBM money. Is that just evil thinking on my part, or is there a delay on purpose that helps these insurances hold on to their money somehow?
Well, I think there are two parts to this to remember. Is they want to create a wall that is high and a moat that is wide to create the perception of a barrier you cannot get around. And why is that? Back to my earlier point. Well, when you go to pharma and you're negotiating on your formulary, and people would be like, "No, I could work around this. I can get in." You want them to be like, "Oh no, there's no way around this thing. I've got to scale the wall and leap the moat to get inside to patient access." So the job isn't to say no. Remember, like, I use this statistic, and everyone has their own, is that the industry on average approves 89% of all prior authorizations.
Gotcha.
So it's not that they're saying no. They just need to create the illusion of, you can't get around me, the PBM. So don't even think about it. This is a high wall and a big moat, and I have guards on every tower. So you have to go through me in my workflow process.
Because we're the ones setting the formulary, and if we make it tough, well, we told you, we're setting it.
That's it. Yeah, exactly. If there was a hole in the wall, people would be like, "Well, I don't really have to pay that, maybe." And to be fair, that's an entire segment that we could talk about, which is ways in which pharma tries to get around that moat and wall. But I think the point of it is they create turbulence, but they don't cancel the flight. They want people to land, because how do I make money?
They still want that flow going through.
Yes. I want to create the turbulence, but approve the member. And we have the opposite approach, which is there's no turbulence. We want to resolve this in a day if we can. And the whole point of it is we want to educate the patient. And this is lost on people. I can't tell you how many times you may get a tape recording of a patient, And you'll hear, because our call center, all calls are recorded, but when someone has like, they're giving, accolades, or we're using it for training purposes, I can't tell you how many times people will be like, wait, I'm going to be on this drug the rest of my life. And I'll be like, nobody bothered to tell you this information? Or that there was another therapy available. You just don't have to go straight to this. Or there might be other ways. And, one of the things that we talk about is health as a therapy, not just prescriptions. And a PBM would never do this. We talk about this all the time. Can I help educate you on other things that you may want to be doing instead of going to this therapy? It's not to say you can't have access. That's not the point. But what we find is we have an access number that's oftentimes 30 to 40% lower than our competitors. And, the great part of it is our customer sat scores are, sky high from a net promoter score. And, our call center sits at I think it's a 56 this week, which is great year to date. The industry average is like a 7 in call centers in healthcare.
What's the unit on that 56 what?
Oh, it's a net promoter score, so it's a way in which you measure satisfaction. So,
out of how many?
Out of 100.
Out of 100.
The industry for patient level is 7.
7.
And so, sitting at a 56 is a good day.
7's like a perfect number in the Bible, but not out of 100.
No. And then on the customer service side in our industry, 14 is the average net promoter score in healthcare. We sit at 96. And this is important, which is I don't want to lose a customer. So how do I work with you? How do I understand should you have an issue or need? And I think this is important. But I think it goes back to your question of how does this industry work? It's this misaligned incentives, and it just brings out the worst in healthcare. When we look at the future of healthcare, back to the 50% we want to engage with, and we have meaningful discussions, and you continue to build this kind of wealth of case studies and references. And I think this is where we're seeing, that momentum for change. And, we're not alone. I point this out. There are so many other entities out there globally in healthcare. It's not just happening in pharmacy benefits that are here to basically challenge that status quo for better outcomes, better cost reduction, and a better service model.
The 50%, you're saying because the other 50% don't want you, in theory.
Well, they don't want change.
They don't want change, rather.
Which is like, no offense. I'm on my third beach house with the current plan here, this is okay. Like, I don't, and no one's, and to your point, no one's really complaining because how would they know? They can't see price. They've been trained for decades that this is a cost inflationary item and it's within a certain corridor of acceptance, and that's the norm.
It seems to me, AJ, when you go into your customer, and I suppose your customers are employers, right?
Yep.
When you go into your customer, at least the first year, and you say, I'm going to sell you something, and they're like, okay, and you say this, and they're like, all right, I see this, but how does that compare to what I have? And then you have to come up almost with a new language, because what someone might say should come out of your mouth will be like, we're going to save X on this. It's a percent, or you're going to get a discount off of this. And they're like, well, yeah, but that's what my insurance guy tells me every year, and that doesn't seem to work out. So you have to create almost a new industry inside the industry almost, right?
Well, you do. And I think the other way that you benefit from is, the reference process and referring, people are referred to you. So a great example is we have a client that was having lunch with another head of HR, and they're having two very different discussions about PBM. One is saying they do nothing for me, my members aren't happy, I'm not happy, and I'm getting the runaround from my consultant because I'm in some coalition. And then you have the opposite, which is we have very similar employees, like same industry, and we love our PBM, and we're on our third year of negative trend. Our satisfaction scores are through the roof. We love them. Could you speak with them? And they do. And, and I think this is the 50-50. Which is you could either be part of, the solution or the problem. And I think when we were, brought in, immediately they were just like, this is a breath of fresh air. You're talking about the things we care about, the metrics that we've always wanted, you're willing to provide and work with us on. And I think that's one of the areas you don't have to necessarily change the industry, but what you are is you're having these success stories that are helping, obviously broadcast real material benefit change. And I think that's exciting for us. I do believe as well that you are correct that the way these PBM services are priced today are undergoing kind of a transition. And there are certainly very educated, excellent people out there that do a fabulous job, and there's some people phoning it in.
Well, I think you're smart you don't need me to tell you that, but I think you're smart in going after the half that wants your stuff. I mean, there's no sense selling to somebody who's not ready to hear that discussion. And so you can put that percentage at whatever, but coming in saying it's 50-50, it's like, yeah, that's smart. It gets across the point of some people are ready for this message and some people probably aren't yet.
We have to focus on the people that do understand and are willing to advance this. And I will say it's starting to accelerate now because I think we're seeing more communication, like our discussion today.
Yeah.
I think, Mike, is hugely important where people could say, you know what? AJ makes a lot of sense. Maybe we should talk to him. And I think this is part of that, is telling the story of Capital RX, letting the numbers and our actual clients speak highly of us. It's easy to say great things about yourself, but to have your entire book of business be a reference to say I've never lost a customer, the ability to deliver on those economics and then have your actual clients talk about the savings and service they've received, that's, incomparable. I think that's what gets me excited and how we focus. Don't waste the time on the people. Your job isn't to convert everyone. The market is too big for that. Focus on the people that understand the value of what we represent and are genuinely interested in the benefit of their client.
Let's say I'm with a bigger insurance company and these brokers that come in and they're like, no, here's your choice of PBMs. Maybe it's one choice, which is not a choice, but maybe it's one. But then you have to then become a part of that conversation. That's number one. And how can pharmacists, if they can, or employers who are listening to this, how can they either A, help you, or B, at least have a chance to work with you?
Excellent point. And so we say that the first battle is being even inserted into the conversation as an option. And so people often ask me, if you would go back in time, would you change anything in your company? I go, no, I never want to go back in time, because there's nothing worse than selling when you have limited to no references and low membership. It's so hard for people to be like, wait, you want me to trust you when? And, and I thank every customer we have that started with us and is still with us today, I'd like to point out, because they saw something in us other people maybe couldn't right away, and I'll never be able to thank them enough for that. But putting that aside, is the first battle is the gatekeepers are like, fine, we'll let this little firecracker in, let Capital RX go up against, the big incumbents. And we often say it's the fight for the fourth chair. The first three chairs are reserved. It's got the velvet rope and be like, hello, big publicly traded carrier. Welcome to this week's RFP, and they're automatically invited because they have to be, they're big, etc. And then there's the fourth chair, and there's literally 30, 40 people fighting it out to get to that chair. And so to get in there is just the first battle. The second battle is do I want to be part of this? Is it someone who has an open, fair mind and you're being fairly evaluated, or is it just more of the same? And, it's just, unfortunately, that age-old conflict. So that's super important. But for employer groups, as well as pharmacists, if you know employer groups, I think the point of it is, and to be fair, there are some pharmacies, independents in particular, that periodically maybe like, hey, I opened a new store. How do I make sure I'm in your network? So your PSAO is already contracted with us, but you can come direct as well. Please, contact us through our website. We'll be happy to accommodate that. But if you know someone from the employer side, you're a pharmacist, and be like, hey, I just happen to know this CEO or head of HR comes to my store all the time, let them know about us. You know what I mean? You can give them my contact information. I'm happy to speak to anyone. I think the other area is if it's an employer. The first thing I do when an employer reaches out to me is be like, hey, I'd love to walk you through our story and who we are. And in addition, I'd love to put you on the phone with 2 or 3 customers. Because I always say, I can say the nicest things about anyone can, but I can't force a self-insured, a self-insured entity is its own thing, and our average customer size, I think this year is 7,500 lives. They're big employers. Try telling a 7,500 life, publicly traded company what to say. That obviously isn't going to fly. My point of it is to say, and I love all customers from 500 lives up to 200,000 life health plans or, hospital systems. Like, I love every account. I always want to make it clear there's no one type of customer. It's your self-insured. Great. But I want to make this clear is if they would like to, engage with us or have a conversation, I would love to do it. And more importantly, I'd like you to hear from someone who actually uses our service. Oftentimes people reserve this as the last line in an RFP. And I'm like, you should be leading with your reputation, not as a, fill in section in an RFP that might be, looked up. And I think this is critical. So that's how I would say, Mike, is if any pharmacist out there knows a self-insured group, as well as any employer group that's listening, please contact us directly, info at cap-rx.com, and we'll get back to you within 15 minutes because I'm on that mailing list and I go crazy when we do not respond to people in under 15 minutes.
Sometimes to these insurances, your brokers that come by, it's like, hey, I want to get Capital RX in picture. No, we've got these 3. It's like, oh, well, okay, then I'm just going to stall before I do anything for a sec here. Then their ears might perk up a little bit. But you sometimes have to make that second push.
Yes.
AJ, pleasure talking to you.
Mike, this was great. I really enjoyed our conversation.
I know that we're not supposed to pick sides here, but I think our listeners, you're going to score well with them instead of the other 50%.
The way I look at it as well is we can help each other, which any person that you refer to us, I think they're going to see exceptional savings and service.
All right, AJ, take care. We'll keep in touch.
Thanks, Mike. Talk soon. Bye-bye.
Bye-bye.